Sure good to see all of you here tonight. I want to thank you for being here. You've been invited by someone who cares about your financial picture. That's why you're here. As I listen to that introduction and we talk about businesses and systems, it dawns on me that most people don't ever get beyond the money. I think about what he covered, the people, the money, and the mission. If you think about those three things, it's very important that you realize that at Net Worth Solutions, it's very different. We do focus heavily on the mission. We do make a lot of money, and we do get to focus on the people. I've had jobs and I've had businesses where it really is about the paycheck. And it is about what you negotiate on the front end. And either you negotiated a good deal or you negotiated a bad deal, and maybe your skill set outgrew the deal you negotiated on the front end of the job. Well, here at this business, Net Worth Solutions, you're able to literally, like John explained, have a merit-based compensation. As you improve, your paychecks improve. As you get better at running our system, the money that flows in gets better. And frankly, the more lives get blessed by what we do here. I love the idea that there is a business in the marketplace that's focused on building net worth for families. I challenge you to search the marketplace. You can actually do searches on all these search engines today on computers and actually find many companies selling software. There's many products out there that purport to lead you down the path of building net worth, but for some reason, families are still failing dramatically. More bankruptcies will be filed this year than they were last year. More bankruptcies were filed last year than the year before. Families, one-on-one, individually, are having a dramatic struggle financially. And our business is set up, and tonight we're wanting to give you an inside look at how it works. Our business model is set up that not only teach you the principles of building net worth, but give you an insight into how to build a business that helps other families build net worth. And that's really the crux of tonight and the reason you were invited here. As we go through this presentation, I want you to know we call it the net worth secrets of the wealthy. And the reason we call them secrets is because no one seems to have their mind around these strategies. Frankly, every family we sit down with deserves the right to go through each of the strategies I'll outline for you tonight. And for whatever reason, the financial services industry that's set up today and does all the great commercials and markets themselves at the golf events and the big football games, you can't go to a big sporting event today and not see financial services companies well represented. But the question is, how is all that representation working when it gets back to the family? And what I've found, and I just want to share this with you, I think it's important that you get your mind around it because we really had to study the industry at large. Before you just go into business, you need to understand what's already in the marketplace that serves that need. And is there a place in the market for a company like this? Those are all the studies we did on the front end of our company. And I'll tell you what we found. The financial industry has been in business over 100 years. And they've been literally raking in profits by the billions of dollars annually for a long, long time. And that's a lot of money. So the question is, if the companies are doing so well, they must have clients or end users that are doing well, is why people continue to participate and allow these companies to succeed. But when you get right down to the end user, that tells you if a business model is successful. Not if the owners of the company are successful, but if the end user is successful. Does the product meet the marketplace where the consumer needs it? And that's what we found is that families, individually, one-on-one, don't know what a 401k is, don't know what a mutual fund is, not even sure how the mortgage works. How about life insurance? There's 6,000 life insurance companies in the marketplace today. Which one's right? And then each one of them has a myriad of products. Which one of those products fits your family best? So what we decided when we got into business at Net Worth Solutions over 5.5 years ago was that we would create a path, a well-lit path to take families step by step down the path, and they could go to the marketplace and find products, but we would help them divine a plan and literally craft a plan that would take them to building more net worth. Because at the end of the day, if the family's not better off after we leave their kitchen or leave their living room, then our business model is much like the industry's, where we profit, but the family doesn't. And that kind of business won't last very long. There's enough of that happening already. So the net worth secrets of the wealthy aren't really secrets, but they're well-designed strategies that frankly every family needs to put into place. What I want you to know up front is our mission is to help families around the world build net worth. We started out in Nevada. We quickly grew throughout the United States. We've got over 7,000 associates today, many in Canada, many throughout the Caribbean and Latin America, and of course throughout the United States. Building net worth for families is what we do. And it doesn't start with products. And I really want you clear on that point. It starts with strategies and principles that no matter what products and no matter what innovations come along tomorrow, the strategies will hold up. See, products change. And I've seen, in the last 20 years of being in this business, I've seen products change a lot. But what doesn't change are these timeless principles. And so if we could teach families the principles, then they can change the products over time to continue to meet their changing needs. And that's what Net Worth Solutions is about. Who we are, I want to cover it with you. Founded back in 2003, I had this idea, this fantasy really, that the marketplace was in need of well thought out strategies and principles that really the wealthy use to get wealthy. Not everybody starts out wealthy. Some people actually build it brick upon brick. And what do they do that seems to be different? And so we began to study the principles they used, and then we asked the pivotal question: can there be a business plan that would make money teaching people these principles? And what we found is the financial service industry is great at producing products. Matter of fact, they're quite innovative. In the United States of America, financial services are great at inventing new products and new instruments to meet the marketplace. What they're not so good at is delivering them in an unbiased way. We find that most families are sold their financial service products from an insurance agent that works for an insurance company, or from a stockbroker who works for a stock brokerage firm, or a loan from a broker selling loans for a certain company. And so the family's inherently in a biased position. And there's no company in the marketplace that says, please help me, please help this family with the strategies, point them out A to Z, and then together we go search the marketplace of ideas and bring great products to the family. That's what was missing. So the products are everywhere. The ideas are out there. There was no company set up to organize them for every family. And so that's what the founders of this company did. John Thompson, Barbara Nagel, and a handful of others, we all got together and said, already being in financial services, these are the weaknesses we've identified. If we could start it over and begin anew, what would we change and how would the end user be affected? And that's the idea of Net Worth Solutions. So you come today, several generations later, having all of these things ironed out. Today we were over 7,000 associates, 10,000 families have been served in 5 years. We've been in and out of many, many thousands of homes. So we've seen these strategies come alive. Matter of fact, the economy's changed too. If you think about today's economy, 7, 8 years ago, it looked very similar. You back up 10, 15 years, it looked very similar. So economic conditions change, and it's funny. Families think that this is the first time there's ever been a problem. Because when you're going through it, you think, number one, you're the only one going through it. Number two, you think it's the only generation that's ever faced this. Well, financial services is pretty mature. As an industry, they've seen all these changes and fluctuations. And the products that come out through these changes and the new policies and procedures that come through these downturns really help families long term, because new products come along that help bulletproof or insulate that family from further challenges. And so we find ourselves in a unique position. The ring I'm wearing tonight, I hope you'll look at it. We recognize our leaders for great accomplishments. We want you to know that helping people is our priority. Helping families build net worth is priority one, because when that works, the business model works. But we also pay a lot of money to do that. We are paid a lot of money to help families. And so you're able to have that sense of contribution combined with that sense of income all rolled up into one. Growing up in a single family home, my mother raised my little brother and I. And as we were coming up, I watched my mother not earn enough money to pay all the bills. And we had people from our church come in and change the mattresses when it was time to do that, the big expenses. We had people come in from our church and literally fill our pantries with food on occasion when there just wasn't enough money to do it. I've seen what having not enough resources look like. And I've seen the generosity, frankly, of our church step right in, and churches do that all over the country. But do we want to be so dependent upon nonprofit organizations? I know this. I grew up with that embedded in me, that I wanted to know how money worked. I wanted to understand how money worked right at the root. I did not want to be in a position of need. I'd like to be in a position to fill somebody's pantries, but I don't necessarily want to be in a house hoping they show up to fill mine. And that's the situation. You know, when you think about it, it's easy to say, well, thank goodness we're in a church that would do that. And yes, it's a huge blessing that that's the case. But I want to be in a position to help do that with others, not be so dependent. And that's the position we want the families we serve in. We want them to understand how it works. There's a real dichotomy today in the marketplace. The financial services industry would have you think they know all the secrets. And they would think that the families need to be dependent upon the industry for all this wisdom. And that there's somehow education involved in this, and there's somehow these credentials and these degrees, and you need to come to our fancy building downtown to get the education. I just want you to know as I stand here tonight and do this presentation that our grassroots movement called Net Worth Solutions is intended to overcome that myth about how money really works. We want to teach single mothers everywhere. We want to teach single dads. We want to teach families how money works so they're not dependent upon an advisor. If a coach can teach them the principles, then they're set for life if they'll live the principles. But we don't want our coaches coming into homes and giving advice and then holding the advice back and giving more advice and holding the advice. We want to give it all to them. So our strategies, and you're going to hear about them tonight, there's 4 specific strategies we want every family to live through. We want you to live through them. That's one of the hopes that comes from a seminar like this, is that at the end of this meeting, you get invited to have this done with you. We would like your pantry cleaned out, if you will. We'd like to be able to come to your home and conduct a net worth analysis. We'd like to be able to have you introduced to these strategies so these principles are intact in your life. And that if you decide to build a business around it, that would be great because we need the help. This nation's families, 97% of them are failing. 97% of families are not prepared for retirement. If you think about it, 97% will turn 60 and be dependent upon debt, family, or a job to continue to pay the bills. 97%. That's a staggering number, considering we're the wealthiest nation in the world. The wealthiest nation. I wonder how they measure that. Is it they take the publicly traded companies and add up their value and say that's how we're the wealthiest nation? Because if you interview each family and add up their debt loads, and you add up their cash flow, and you really do a net worth analysis, the average family's worth negative balances. They're not worth 0, they're worth less than 0. And up until very recently, we were dependent upon our house value to even buoy up a positive net worth balance. So this is a problem. And this apparently didn't start in our generation. This has been going on for a long time, and I think you'll trace it back to the credit cards. I think you'll trace it back to the ability to get a unsecured line of credit without really applying for it. If you think about how it all started, back in 1957, I'm going to share with you the inside of the credit card industry. In 1957, a middle-level manager with Bank of America came up with this novel idea. The way they used to do loans is your parents had to go to a bank. The banker usually knew your parents because they banked there. They would sit down across the desk from a banker and they needed to buy a boat, or they needed to buy a car, they needed to borrow for a house, and the banker would run a credit check, and the banker would see an income statement and qualify you to borrow money. And then you did a handshake with the banker and signed a few documents, and they loaned you the money. Well, today, things are very different. In 1957, a middle-level manager said, instead of having that formal process that really slows down the lending, what we really need to do is allow people to borrow less, but make it unsecured. And since it's unsecured, not tied to an asset, we could charge a little higher interest because it's a unsecured loan. And if more people will borrow less, and it's a higher interest, we'll actually make more money quicker loaning to more people, diversify the risk. And the bank said, well, how would we do that? We don't even have enough bank people to meet with enough people to borrow that kind of money. They said, no need. Issue a piece of plastic that's already got the loan on it, send it out to every mailbox in the city of Fresno, California. They'll pull it out, they can call a number and activate it, we'll run their credit, and they're underway. So they did it. The Great Fresno Drop is what it was called. And the Great Fresno Drop was in 1957. Every member, a citizen in the city of Fresno, California, got their little credit cards, and we were off to the races. And today, in college campuses all across this country and now in other countries, our young people are getting unsecured lines of credit advanced to them in the terms of plastic. And they even do studies to determine that if your first credit card is a Visa, we know you'll be loyal to that name your whole life. And then they've gone as far as to figure out if we can give you a higher credit limit, you would consider that a status of some sort, and you would be more likely to change credit cards if we would increase your limit, because somehow this has become a status for this generation. And I'm telling you, this is the beginning of all the trouble we're in as families, because you don't need to sit with that banker anymore and make eye contact and shake hands and tie an asset to it. And this was the beginning of the issues that we face now. That became that spontaneous generation where, remember the layaway generation? You may not remember. Some of you in the room do. Where my mom would go to Sears and she'd pick out our school clothes for the year. And we'd pull the tough skins off and the Winnie the Poohs and the whatever else that she could talk us into wearing from Sears, and they'd put it behind the counter. And it would stay behind the counter until my mom made enough payments right there at that same counter to be able to leave with the items. And this is the way you used to buy things. Things have dramatically changed. And we're not going back to the layaway. Plastic's too easy. It's too convenient. But we've got to get better control of it. And at Networth Solutions, one of the first things we do with every family is sit down and address their debts. We want to talk about their cash flow. How's the cash flow coming in? Are you spending more than you're earning? Step one, are you spending more than you're earning? I mean, think about it. If you're spending more than you're earning, it's never going to work out. So how many families really do know how much they're spending? What happened to the old budgets? What happened to the idea that on one side you put down what you're making, and on the other side you put down what you're spending, and at the end of the month you realize I'm out of money, and so you stop spending? Well, that's changed with the credit card, because it's basically a cash advance to pull you through from month to month. And then a new credit card with an extended limit, you can kind of continue this for a long time. And when you look up, you're $20,000, $30,000, $40,000. So we meet with families that are $200,000 and $300,000 in credit card debt, unsecured debt. These are the folks filing bankruptcy at unprecedented rates. The bottom line is, most families are 3 paychecks away from bankruptcy. Take away the next 3 paychecks. Take the next 3 paychecks away from your home. Things dramatically change when you start taking away paychecks, because we become dependent upon the next check. And then we're literally borrowing from the future to pay off current obligations. And that's got to end. And I'm telling you, as a company, Networth Solutions, we've got a business that's set up to end that cycle. And it needs to end in this generation. And that's why we do these seminars, to be able to bring people in who want to be a part of the army that needs to be assembled to go out literally with sword and shield and teach these principles. Cash flow management, top of the list. Debt management. And when I say debt management, I happen to stand before you debt-free. But debt-free isn't essential to getting wealthy. Matter of fact, it's proper debt management. You shouldn't necessarily just pay off a house if the government's willing to give you a deduction on every principal payment. See? If you're able to actually borrow money cheaper than using that money to pay off a mortgage. But for cars and for televisions and for video games and for tonight's dinner, you should never use credit cards for these things. Debit cards, the convenience of plastic, but it comes right out of your bank account. These are the principles we want instilled into families across this continent, and we need help doing it. So you'll admit that there's a financial crisis out there, and it's got to end. And it either ends in tragedy for a country, or it ends in your house with a little personal discipline. And we have to make a decision that we're going to be responsible. And we can blame that middle-level manager at Bank of America, or we can say, you know what, I wasn't even born in '57, but I am responsible for what I spend. I am responsible for the debts I incur. I am responsible for the income I earn. One of the great things about this business is you're able to subsidize your income until you're making enough to replace your job. And then you're on this mission with us full time. And that's what a lot of our associates do, is they start part-time. And they learn the principles of building net worth while they keep the stability of their job. For a lot of people, they need that psychological stability, even though today in our country we know jobs aren't necessarily stability. But a lot of us need that feeling of that paycheck coming in while we learn a new trade. And while you're learning that new trade, you put yourself in a position to learn the principles that'll save you financially forever. And then you're able to make that transition and make a business out of it. And that's what we do. Let's talk about these principles for a minute. If 97% are failing, that means there's a certain percentage that are not. Now, we know it's too few. It's only 3%. But let's talk about what the 3% are doing. That's really the crux of our presentation that we do with every family when we sit down with them. The 3% know this. In your mind, diversification means what? If you're going to diversify, if you ask a person who works at one of the big brokerage firms what diversification is, what would they tell you? Yeah, different stocks or different mutual funds. Mutual funds were the epitome of diversification. The idea with the mutual fund was buy a growth fund or buy an international fund or buy just a normal fund, and it will diversify internally. Because a mutual fund, the very intent was that they would have 15, 20 holdings in it, at least, to be able to spread out your risk. And you could buy it as little as $50 a month, and you're diversified, and you're able to put dollars into the stock market and really do what the wealthy do, right? Well, let me just give you a little insight. Diversification is not all your money in the stock market. That's one of the buckets. You remember all the eggs in one basket? You've heard that, don't put all your eggs in one basket. Well, the stock market is a basket. Your real estate is another basket. Your bank account is another basket. And oh, by the way, your mattress and safe at home is another basket. So there are multiple baskets, and diversification means put money in the different baskets, not all in one. And this whole idea, it's really genius if you think what Wall Street's come up with. Diversification means put it in a bond fund, put it in a stock fund, put it in an international fund. Well, guess what? It's all in the stock market. And when the stock market's down, they're all down. So you've got to really think this through. Wall Street is a basket. But most of us live on Main Street. And most of us are trying our best to get our families to college. And we're trying to get our children a good education. We're trying to keep the church from having to fill our pantries with food. Well, the only way to do that is to begin to think like the 3% think. Okay? The wealthy use Wall Street for cash that they don't need right away. It's long-term money. The wealthy use real estate to put away the big bucks. If you talk to the billionaires of this country and others, the billionaires, and by the way, once you add $1 billion, it doesn't go away as easy as at $1 million. The folks with $1 million, it kind of comes and goes with the ups and downs of an economy. But the billionaires seem to be insulated pretty well. Wouldn't you agree? Well, if you notice, they put 60, 70% of their money in real estate. And I don't mean rental houses in their neighborhood. I'm talking about serious real estate. Resort real estate, commercial real estate, developments, big tracts of land. They stock it away. I have a personal relationship with a billionaire that lives in the state of Utah. He's one of the two big folks in the state of Utah. This gentleman said to me, every dollar he's ever made, he's been very good at earning money his whole life. Every dollar he's ever made, he socked away into real estate. He passed away last year, and literally 70% of his fortune, which was about $5.5 billion, was sitting in land banks, real estate. And so he didn't know much about real estate, but he knew it was always a hard asset he could get his hands on. So we teach people, when we sit down with families, about the reality of diversification, not the myth. And that's such an important principle that the 3% really do understand. Another thing I want you to know while I'm on this subject is this idea of investment strategies versus retirement planning, because those are the last two of the strategies. There's cash flow management, debt management, investment strategies, and retirement planning. Now, a lot of people say, what's the difference between investment strategies and retirement planning? Well, the difference is clear. It's taxes. People who are busy planning for retirement need to shelter as much as possible so it can compound in a tax-free environment, or at least tax-deferred environment. And there are products that the marketplace has come up with, such great ideas out there, such good innovation, where you can tax defer or, in many cases, create a tax-free environment for the compounding of your money. That's retirement planning. And we like to show families how to do that. Now, investment strategy is different. That's money that you're looking at 3, 5, and 10 years out, not necessarily retirement. So investment strategies are a little more aggressive than retirement planning. And so you need to know how that works too. And what are the different pockets of diversification that fit investment strategies? Well, we sit down with families and go through it. Isn't this an education you'd like to have for yourself, no matter what you choose to do for a living? I'm fully aware that in our company, Net Worth Solutions, people come into our business Many of them decide to make a career out of it. And they learn how it works, and they learn how money works, and they really enjoy teaching other people and making a fortune. But some people are passing through. They're here temporarily. Maybe they're an artist. Maybe they're a musician. Maybe they've got some other passion in their life, and they come through here briefly. And I'm fully aware that we're teaching those people principles that will save them financially forever no matter what they choose to do with their life. And that is so essential that you have that clear, that tonight is the first step in learning these principles that you really do need to know. And so whether you in your mind have the idea that, oh, I want to do this for a career, or you don't know that yet, I invite you to engage in this business. Engage in the business plan, whether it's temporarily or whether it's permanently. You may not know the answer sitting here, but you'll never know it unless you get in and learn these things we're talking about, and then the answer comes. I've never learned anything that was of any value looking in from the outside. And so I just want you to know as you sit here tonight and you're going through this, well, I'm so committed to being a nurse, or I'm so committed, I'm a school teacher and they pay so much, I'm just so engaged in it. Whatever is on your mind, I want you to see this as an essential, vital step in learning how money works. Keep doing what you're doing. Love what you're doing. If you don't love it, stop doing it. That's my recommendation. But I want you to know our mission is to help families build net worth. We want your net worth to be built. We want the families we sit down net worth to be built. And we've got a system to teach you how to run your own business around helping others build net worth. And that's my message to you tonight. I'm so glad you'd be here and give me a few minutes of your time. I hope you'll engage with us at a very serious level. Look forward to meeting you all and sharing our business careers together. Thank you.